Washington's clear thinking headquarters. The Morning Majority, 5 to 9, 105.9 FM and AM630.
WMAL.
8:37 on WMAL. Karen Henready in for Mary Catherine, Brian Wilson, Brian Neiman, and Larry Kudlow is on the line, host of the Kudlow Report on CNBC. And you can hear him on the radio, WMAL, 7 o'clock Saturday nights. Larry, all right, so the Super Committee didn't come up with a bigger deal than the $1.2 trillion worth of cuts. I understand how some hawks are upset about this because they're worried about defense cuts more than anything else. I get that. But on the grand scheme of things, hey, we didn't have a tax increase, and we're still getting the cuts. And you could say there was actually bipartisan agreement because they came up with this deal back in August, and both Democrats and Republicans agreed to it. So what's the big deal with the Super Committee not having anything more than the $1.2 trillion in cuts?
Don't see what the big deal is. Can't figure it out. I got all these nutheads in the stock market going around yelling and screaming, and I think it's absolutely the best possible deal. No tax hike, and we got some more spending cuts. So in total, you're going to get, with the automatic spending trigger, you're going to get about $2 trillion or $2 trillion plus in spending cuts. And we got a couple more. Let's see, go back to the CR. We got, $35 billion on that, and we got $35 billion last Christmas. I mean, I think it's pretty good progress, and we don't have to raise tax rates, which would have done even more damage to the economy.
So why do you think that did the market react to that yesterday? We had Jimmy P. on earlier this morning. He wasn't so sure that it was because of not having a super committee big deal. Why do you think the market went down a little bit yesterday?
I have no idea what moves the market on a day-to-day basis. It's one of these great incomprehensibles in life. It's a super extra celestial thing that nobody could possibly fathom.
Not even the great Larry Kudlow?
Nobody. Day to day.
Although there are many people who tell you they can figure it out.
I know. Don't listen to all that stuff. I mean, if you look into the market particulars, the sector that got hurt the most was banking. And when banking gets hurt the most, that's not about the Super Committee. That's generally about worries of Europe banking contagion.
Well, let me ask you about that. One of Jim's concerns is how much risk of European debt are U.S. banks holding? What do you think about that?
The answer to that is,
concerned are you?
The numbers have been done, and it's about $50 billion direct exposure.
Mm-hmm.
It's nothing. Some yapping around and babbling about credit insurance swap and things like that. The credits, the CDO market, the CDX market are half of what they were back in 2008. It's fallen so much, and it's just not much of an issue. By the way, a chap named David Goldman, or even better, Dick Beauvais, have done the work on that. You'd have to have a total collapse of Europe to justify, major market crashes here, and I just don't see it.
Well, then why are people going around with their hair on fire about all this stuff, then, if that's the case?
Some people just like to put their hair on fire. I don't know what it is.
When in trouble or in doubt, run in circles and scream and shout.
So like chickens with their heads cut off. Yeah. Actually, because we didn't get any tax hike from this goofy Super Committee, I rather think it's bullish for stocks, because the economy is doing a little better. We're probably growing at 2.5%. We're not falling back into recession. So from an investor standpoint, that's good. Profits are very good. So profits are the mother's milk of stocks. So I'm fine with that. We got a little more spending, a little less spending. So government at the margin is going to be slightly more limited. We'll debate this whole thing in the election next year, as we should, and see if the Republicans can capture the Senate, as they probably will. So that's going to give an opportunity for some serious tax and entitlement reform. No, I'm actually quite bullish about this thing. Said so on our show last night. Argued with my three nutcake investors who were sort of parroting the party line. And I said, you're all wrong, you're all washed up, and you should all hand in your licenses. You're just wrong.
All right, this may be a little geeky, but I remember during the 08 debacle, we were worried about LIBOR rates, which were the interbanking rates, how much banks would lend to other banks, and it went way up. If you have a failure in Europe, would that cause problems here? Would banks want to lend to other European banks? Would that cause problems with getting credit here in the United States?
Well, it's really not our credit problem. It's their credit problem. And, in fact, that is true. These LIBOR rates, both in dollars and in euros, have snuggled up. The big story on that is funding problems in Europe. Okay, U.S. money market funds have stopped making loans, and U.S. banks have cut back. I think they've probably stopped making loans generally. And that's why Bernanke had to put more dollars into the European Central Bank. And they're not making loans to each other over there. The rates on their loans and their swaps have gone up a lot. And by the way, something called the 2-year swap spread is close to where it was back in 2008. It's about 40 basis points short. So those are issues. Yes, they're European issues, to be sure. And that's why I say, from an investor standpoint, Europe's problems probably were down to our advantages right now. Europe is on the cusp of recession. As I said a second ago, our recession threat seems to have passed, at least for the moment. And think about it. If you had a $600-800 billion or $1 trillion tax hike with all the top tax rates going from 35% to 50%, which is what the Democrats basically wanted, this whole thing was about raising tax rates on the rich. That's all this exercise was about. If that had gone through, the Republicans would have helped to destroy the economy and their own brand. The good news is, since it didn't go through, the outlook for growth is pretty good, and therefore I'd probably be buying some. You have a day like yesterday, 250-point drop. None of the geniuses really know why. I'd come back and buy some stock right now.
Quickly, does Bernanke get involved at all in trying to help Europe? Can he get involved in any way?
Well, he's already been involved because the Federal Reserve have poured a lot of dollars into the ECB. There is a dollar shortage in Europe right now, so he has been involved. But whether he'll get more involved, I have my doubts, because I don't see much sentiment in Congress for that. And, of course, the Republicans on the campaign trail have hammered pretty hard on that. Bernanke says he doesn't listen to that stuff, but he has his fingers crossed. He's fibbing. Of course he listens to that stuff.
Yes, he does.
So I don't expect us to be very proactive. By the way, I'm not that bearish on the European story. You know, you've got a new conservative government in Spain. You've got a basically right-of-center guy, Mario Monti, running the new government in Italy. And I think that's pretty good news. The guy running the government in Greece is a centrist. He's going to probably get the job. But I'm just not that bearish on Europe right now. Yeah. So I don't know.
I'm glad to hear that. I'm thankful for you to be around, Larry, this time.
I like a guy who looks at the glass half full. Thanks, Larry.
All right, well, take